All right, what's going on, guys? Good morning, good afternoon, good evening, wherever you are. My name is King Wabi, and welcome to another segment of Crypto World Radio, presented to you here on Twitter Spaces via Because Bitcoin, where we, typically have a sit down and talk with anyone from the crypto community. Could be devs, could be VCs, could be people from the trading community, whether it's the DeFi community, whether it's NFTs even, or the Bitcoin community. Here at Because Bitcoin, we do cater to crypto specific content via Crypto World Radio, and also in our extended branch, Arco Partners, coming to you late Q1, early Q2. I'm really excited for that, and we're here today joined by Dr.Doom himself, Mike. I don't know how to pronounce your last name, dude, so you're going to have to excuse me. So I'm just going to call you Dr. Doom. And also Feel Pain. What's going on, guys? What's up?
What's up, Wabi? How's it going, man?
I'm chilling, man. If you guys want to join our Discord, links up above. And just a reminder, 5 to 10 minutes after our Twitter Spaces, they do get uploaded onto our YouTube. And just as a reminder for everybody, moving forward, all of our content will be streamed here on Twitter Spaces. That includes Market Talk, our premiere show with Carter, where he goes over more macroeconomics in U.S. equity markets. And earlier in the day at 11 a.m. Eastern Time, we have Market Check with our CEO, Max, and also our analyst, Premise, and Snorlax. And again, with those Twitter Spaces, they're uploaded onto our YouTube. But those two shows will have at least once a week streaming via YouTube. So be sure to check that out. And with our YouTube streams, they are also streamed on Twitter with that cool feature, whatever it is. I'm not sure. What they call it, but um, that's pretty dope. So Mike, man, it's been a couple of months since I've been with you on a space. I think last time we ran into one another was during I think it was like during the whole Celsius debacle
Yeah,
and
yeah. I
BlockFi.
because
Yeah,
I
like
I
in
remember
June.
because I was chatting with you guys while I was waiting at the airport. We were talking about Celsius, and I think it was the same time as like everyone figured out that they had like employed a like a former porn star or something.
Yeah. And Nuke Goldstein. Yeah. What a timeline. What a timeline, man. So, dude, I guess we'll get started, bro. So, where did the
Let's
name
do it.
Doctor Doom? Where did the name Doctor Doom come from, dude? Like, did that come during 2022
That
or?
was affectionately placed upon me by the Bitcoin community, specifically the Cafe Bitcoin crew with Swan. Uh, Because I like people would start talking like hyper bullish, and I was just like, "Hey guys, I'm all for like the bullishness on Bitcoin and everything, but just keep in mind that there's a lot of macro headwinds that have not had a single answer come forth to like actually resolve the problem. So let's reel it in a little bit and let's stay realistic." And that's
Like,
really all that it came from. Like that was it. Because like I'm not like you guys know me. I'm not like just I don't get off on doom, but when people think that what I talk about as far as realization goes or realism goes, they can think it's doomy all they want. And yeah, they put the title on me, so I'll wear it with pride, just like I wore the Dark Tetrad title with pride after I can't remember even what article or news outlet it was that claimed Bitcoiners were like the Dark Tetrad of the world. So I'll wear it.
how long have you been in the Bitcoin space for, and how did you come about it? Like, what's your story?
So I got into Bitcoin actually as I was mobilizing for a deployment overseas back in 17. Uh, it was going to be the first time I was going to have like a decent salary thanks to the army, and it was going to be tax free. So I was like, okay, I don't want to just piss away all the money. So I was like, I should probably look into investment strategies and like what the best guys do as far as getting positioned to actually make some like generational wealth. And that's where I came across Bitcoin because it was new and people were talking about it. And then I started looking into it. First thing that brought me to it was just the gains and the more I did independent research and just read up on it and like made sure I understood it as well as like just basic economics and Austrian economics and how and like I learned how to trade from a particular individual that had experience with like the institutional side of things. So like he was teaching me some of like the kind of quote unquote secret tricks of the trade as far as like charting and technical analysis and where these players were going to be doing their things. And as I just watched and learned and paid attention, he was right, and it would it would go the way he would claim it would or forecasted it would. So just been learning ever since. And the deeper you go down the rabbit hole, the wilder it gets. So it's been a fun ride since then.
I've usually seen you here and there on some of these spaces that Magoo hosts, Dr. Jeff and the like, Joe Carlos here, and you guys are really the only like Bitcoiners in the space that have paid attention to macro for a while. Is that something that you've paid attention to since day one, or was this brought to you more like 2021, 2020 during the coronavirus pandemic?
It was largely like 2020, 2021, and it wasn't necessarily the pandemic. Um, it's like the type of person I've always been is I've always been kind of like a first principles thinker. Like if there's a problem, I want to like trace it back down to the source so I know where it came from and I can like make sure that if I like because you get you when you identify a problem and you understand where it came from and how it came about, you can do better to make sure it doesn't happen again or to mitigate any sort of losses or damages that could come forth in the future, whether that's an injury like working out or it's a fuck up on the job or whatever. And in 2020, 2021ish, when Clubhouse came out, I started interacting with a lot of individuals on there, and I got the opportunity to interact with guys like Preston Pish and Jay Gould, and they knew a lot about like the bond market, and I didn't understand the bond market at all. So I'd be getting up at like 5:30 in the morning because I'm naturally an early bird. Like I usually get up between 4 and 5 in the morning every day, and I would get up and just chat with these guys and just have conversation and ask them so I could understand like the bond market so I could have conversations with them, and it's just snowballed from there, really.
Jeez, man, I forgot to say this, but as you say, you're coming from the army. Thank you for your service, sir.
I appreciate it.
Yeah, man. Um, so, with that being said, um, what are your thoughts on 2023, man? You know, inflation has obviously peaked. Um, I personally think DXY is in an overall downtrend. I think by second half, we'll likely see DXY under 100, to be honest. Uh,
Whoo!
yeah, it's a pretty bold claim. It's a pretty bold claim.
Well, this is an
But
environment for bold claims, man. So I'm not going to tell you you're
yeah,
wrong.
yeah. Like I'm of the camp that like, you know, most of these. I'll make it quick. Usually with these spaces, I don't like to ramble on. I like to have the spotlight more on our guests or whenever we have like the more open-ended community spaces. So I'll make it pretty brief. To me, the only reason why we had such crazy CPI numbers towards the latter half of 21 and 2022 was simply because of the pandemic, a lot of the supply chain bottlenecks and things of that nature and quantitative easing, right? And, you know, we're approaching that 1 year mark since that last batch of QE, end of Q1 of last year. And also, a lot of the supply chain infrastructure has calmed down. The commodity index is now negative year over year. Wheat, wheat has, for the most part, retraced a lot of its gains. Um, Same thing with crude oil. Same thing with lumber. We also have things that that are basically indices for shipping containers and of the sort, starting to retrace back to pre pandemic levels. And when you have all of that happening, of course, that puts us in an environment of disinflation. And you know, as we go more near and near to the second half of 23 and at the end of a rate hiking cycle where, you know, the market is slowly pricing in a first rate cut, potentially somewhere in Q3, end of Q2, because I really don't believe we're going to have more than a quarter or so with rates elevated. That's just me. That's just me. But yeah, that's pretty much like a TLDR of where I stand. And to be frank, I don't really feel as qualified as many of the people here on Twitter to go up on Twitter Spaces with like 600, 700 people, right, with all the blue check marks, talking about like Japan and Europe and what have you. Because when I look back at something like, you know, last summer, where people were predicting oil at over $200 a barrel, double-digit CPI for the U.S., talking about, you know, Europe freezing over the winter, and going through the Stone Age with the quote-unquote energy crisis. And, you know, fast forward a couple of quarters later, things are not as bad, man. Things are not as bad, especially here in America. And I just find it funny how, like, you know, Joe Biden goes to a Baskin Robbins to have his vanilla chocolate chip ice cream cone and says that he's not afraid of the strength of the dollar when the DXY was at its peak. And, you know, when Joe Biden is out trading these people, pretty much giving the top of inflation and the top of DXY, I just like to keep in my own lane and just let the market do its own thing, and be conservative with the market, and not really be too outlandish. And to be honest, to me, 2 to 3% CPI second half of 2023, it's not really that crazy, man. It's really not, in my opinion. So what are your views on all of that stuff, brother?
Yeah, I agree with the sentiment, or not the sentiment, but the claim or the position that like a lot of this shit was caused by the pandemic, because it really did. Like it's a meme at this point, but the pandemic largely did what looks like pull forward and then compress or condense a lot of events that probably would have naturally been spread out over quite a long period of time. Um, and then add on top of that this war over in Ukraine, really kind of throwing a lot of gasoline on that already like cooking fire. Um, but I will say that I don't know if I won't even say agree, because this is just a conversation. It's not like it's a debate or anything. But I don't personally think that inflation has peaked. I think we could see a year of like actual commodity inflation, because I just put up in the nest from this morning from a buddy of mine shared this chart that I guess apparently lumber had spiked in price over like by like about 24% over the last 24 hours. And I've been wondering if this was going to happen, because I've been following the FreightWaves account for quite a while and trying my best to keep a decent beat on like how shipping is going. Because the like one of the weird things that's going on right now that I've talked with a few people is that, yeah, the cost of a shipping container is down, but now that demand is waning so much, that the shipments as far as the trucks on the highway, excuse me, on the highways and everything, there can be any number of trucks on the highways, but they're not nearly as full as they should be. And on top of that, I have some buddies that work in logistics for these like shipping firms, and they're running into issues where their margins are so compressed that these guys aren't making any money on their loads. So not only are the shipping guys struggling at nearly like what looks like every turn, because then you also have to like they're dealing with like the employment market. Like they might have plenty of jobs, but they can't fill them. And then they're also running into difficulties with being able to fill like parts requisitions so they can get their fleet back out. So I'm watching stuff like that, and it's just, if things continue the way they're going with interest rates, even being paused, like the equity markets can like posture bullish and everything, but from what I'm seeing is that like everything on the like that's underlying the actual equities is not performing that well. And now that can take, months or quarters to like actually filter through and affect markets and everything. But I think commodity inflation might come back. And now like the fair disclaimer that you put out, and I'm going to put it out now too, is like I'm largely a LARP. It's not like I'm a trained like economist or like a institutional trader or anything. I've just picked this up as I've gone. So like any position I share or opinion I share, take it with a fat like table silver platter full of salt. Um, but the underlying performance as far as those metrics goes, it's it's cause for concern for me. And I know Carter and I have like particularly been bearish for this. Like basically the entire time I've known Carter, we've been almost exactly of the same like position or mindset. And I wrote a newsletter about this, and I think that we're at a point now where macroeconomically, we're probably at like a moment where bearish momentum could be waning, or at least maybe not exhausted, but at least weakening, which I guess would be waning, to the point of where bulls can start taking advantage of the market a little bit again while like bears take a breath. And I think there is the possibility for like this market to kind of start sideways action with a potentially upward leaning inclination up until the point of probably I'm honestly thinking spring or summer, because that'll be the time where, regardless of whether China opens back up, that'll be when everybody goes back to traveling again and driving around. And if things haven't significantly changed by then, then that's going to cause oil demand to come back. And again, like even like let's just assume that China actually doesn't open up; it just stays the exact same. Oil is going to creep up probably a little bit, not by much, just because it's responding to that cyclical seasonal demand. Um, but then when you do that, then you get commodity inflation, right? Most of the time, and then if at least from my understanding, that is, and then if you get both of those on top of the freight industries maintaining the difficulties that they have now, then you start to look into likely situations where people or companies or individuals are having to pay more for shipping in order to move their product, which can come with any sort of difficulties with price increases and stuff like that. And I that's basically my synopsis, is that I think that we're probably going to see a little bit of like just bear market rally for the next couple months, maybe the next 2 quarters. But I think that when it comes time for like harvest outlooks and things like that, I think people will start like actually kind of changing their tune a little bit, because if Carter's here, you could probably talk to it as far as like the inversion of the bond markets. It usually is like 18 to 24 months, if I'm not misunderstanding, for like the recession to actually kick in. And they inverted what, like 3-4 months ago. So we still got a ways to go before that actually kicks into the markets. So I don't know. That's the position that I hold, and I'm just looking forward to seeing if like how right or wrong I end up being.
It's understandable, Mike. It's understandable. To my knowledge, a lot of China is reopening at a faster pace, more than people expect. I know on some of the more crypto specific spaces that I hop into from time to time, a lot of the Asian crowd is there, and some people from China have found access to these Twitter spaces, and they've been saying that what we see on the news and on the headlines is largely a cover up. For the most part, a lot of China's has been opening, and to me, actually have a chance to lift something like the Eurozone out of a recession. And when it comes to European economic surprise versus the United States, that comes mostly from stronger exports expectations, mainly to China, and that equates to lower imports, which means weaker commodity prices. And like just from looking at it from a chart perspective, like most of these commodities, as you mentioned, like lumber, I am aware that it's pumped like 30 33% off of its low.
Dang.
And
Okay.
yeah. But the thing is, Mike, lumber has gone down like a shitcoin. I'm sorry for the language, gentlemen. I like to refrain
Nah,
from
but it's accurate though.
yeah. And the thing is, when you have such a disparity, um, in price versus the market, right? Lumber is back to, like pre-Trump era prices. It went to I think it reached like 328, 329. Those are some. I'm mainly a price action individual, and when you have something deplete so much in price, you would think it was like a DeFi protocol that was hacked, right? So I think it's just a nasty mean reversion,
That's true,
if
Wabi, but not
anything.
not to cut you off, but I think that's
Yeah.
partially linked to housing too, you know?
Yeah, yeah,
And that's
yeah,
not really, so it's not super correlated with other commodities in the sense of like the
yeah,
housing bubble was so intense that,
yeah,
now that that's coming down, it makes sense that lumber's coming down.
yeah.
Well, and
So
to be fair to Wabi's point, is like with how rapidly and how high lumber went up, and with how far it cascaded down, like
it was kind of an
there's
anomaly,
gonna be
really.
liquidity that comes through and just takes advantage and pumps it up a little bit. Like traders are gonna trade. Like that's their
Yeah.
job.
So, Mike, going back to digital assets, I don't really want to overtake the space, and flip it to like a macro space. So I'm sorry for that, guys. I know you come in here for more of the of the crypto side of things. Um,
Thought we were on
so
market talk, bro.
yeah, yeah. I don't want to do that. I just wanted to entertain that conversation just for a little bit. Um, due to Mike's involvement and associating himself with the friends of the show, of the overall Because Bitcoin brand,
I thought this
Dr.
was
Jeff and
because
etc.
bonds.
No, I'm okay, dude. I don't really,
I'm just,
I'm not really too
That's
knowledgeable
that was
in
pretty
that
good though,
stuff.
because
So
bonds.
yeah, so Mike, dude, like, what are some developments in the digital asset space that you've enjoyed seeing or are currently seeing at the current moment throughout the last 5-6 years that you've been involved, and also like, what are some things that have surprised you in the digital asset space? I'd really like to get into the nitty gritty of that stuff, sir.
One of
It's an
the
interesting
one of the most
conversation.
fascinating lessons that I never thought I would value would be experiencing like a full, complete Bitcoin bubble ascension and then popping. Um, because I think on like experiencing and understanding that market and like really taking in like what the narratives felt like for the market, like in through the crash of like 18 and 19, and then just like the scraping the bottom of the barrel. Like if you weren't there, I can't describe to you guys how eerie like Bitcoin and crypto Twitter felt. Like everybody was gone. It was literally like if there was a way to put just closed captioning crickets on like the Twitter feed, that's what it was. Like no, like everybody was either beaten down and bloodied or too embarrassed to even talk about anything. Um, and then just like really learning and observing the general psychology like that, and then kind of like having it for the past year, and it's fascinating how just like even just outside of crypto, between crypto and Bitcoin, but also in legacy markets, just witnessing how it's like very, very similar, almost carbon copy the reactions and like the way it played out and everything was. Um, what I've really enjoyed has been watching these last 6 months everything just blow up. Like I don't enjoy knowing that like a lot of people have lost like savings, like life savings and stuff like that. Um, I don't like that. I know what it feels like to lose like a very important amount of capital. Um, because in the first like that first year of my like Bitcoin journey, I did get super greedy and thought I was super smart and tried playing around with BitMEX while I was overseas, and I paid a hefty price for it. But to be fair, like to kind of like hammer home that my enjoyment of watching a lot of these shitty crypto projects blow up is like it's going to sound painful to people that got hurt, but like especially from us in the Bitcoin community, like sorry guys, like a lot of us tried to at least warn you and make you aware of a lot of these projects, but people were so caught up in the gains and the dopamine and the euphoria that they're just like, nah, fuck you, like boomer coin, like just not interested in maximalist. And I was just like okay, like can't say I didn't try to warn you. Um, the FTX thing in particular has been like that was there was so many tentacles involved in that I don't think any of us could have ever imagined. Um, there's a lot of events that have occurred in the last 2 3 years in particular that I am personally very excited to see the documentaries when they come out on Netflix. Um, was there a third question that you asked, Wabi? I can't remember at this point. I've rambled for so long. Because you asked what I enjoyed what I've enjoyed and what lessons I've learned. I don't know if there was a third one.
Just ongoing developments that you've currently seen in the space develop that actually excite you. Could be anything Bitcoin specific, crypto specific, anything that you're currently paying attention to specific to the crypto space. That was part of the question.
Um, to be honest, I've really kind of like distanced myself from like paying attention to any developments because like to be completely honest, like for a Bitcoin maximalist like myself, like once you understand it and once you get to the point of where you're acquiring it, like you don't really need to watch the market or developments with a magnifying lens like you did before 2020. Um, Now that being said, there I am kind of watching a lot of the stuff that like Jason Lowry and others are trying to push forward. Just because I have conversations with individuals that are pretty, I don't want to say important, but they're influential on the actual developments, not like the forward facing social media bullshit that everybody thinks is the important part. It's actually the stuff going on behind the scenes that nobody like talks about that shit's actually happening. And I do try and stay on top of like regulatory stuff. Um, just stuff like that. But like, cause like in like the really boring that's a really boring answer. And like, unfortunately, like the really impactful developments of really anything in life are the ones that are slow moving and take a lot of time in order to develop and refine and push forward. So I guess that's what my answer would be is I'm looking forward to following up on how the individual investor and in like investing institution is going to be working to um, really push forward for like some positive legislation in the U.S. because it's kind of a meme and it sounds super conceited, but the world really does follow the U.S.'s lead in a lot of things, and it's really really important to pay attention to how our government treats Bitcoin because it's going to determine how the rest of the world, largely how the rest of the world does. And that also has a lot of implications for the broader crypto market in general if you're someone that dabbles in that stuff, which I know you guys do.
No problem, man. I understand.
And then
I
and
know a
like
lot of
and
people.
I'm not saying it like I'm judging you guys. You guys know that. It's just everybody has their flavor of what they like to play in.
Yeah, yeah, completely understandable, dude. So speaking about like legislation and all that stuff, things pertaining to regulation, I know as far as the institutional side of things, that would actually encourage for more individuals to flood into the space. So one question that I like to ask, it's usually a staple of mine's, especially for the Bitcoin community. Uh, how do we onboard the next few million users into the digital asset space? What do you think it is? Do you think it's pure education like Andreas Antonopoulos, right? I know I know some of these like I guess I guess, big-brained institutions when it pertains to academia, right? Like Ivy League schools and the universities here in America, they're actually blockchain courses, and eventually probably like blockchain engineering degrees, right?
Yeah, definitely.
So, so how do you think we onboard the next 2 million users? Do you think it's education? Do you think it's network effect, using these social platforms like Twitter, YouTube? Um, do you think it's developments that actually happen within the Bitcoin ecosystem, uh, like country adoption, like El Salvador? Because usually it starts off very small and then it rapidly expands. Even though El Salvador isn't really like that big, to be honest, if we're being real here. But that usually starts a trend, So in your opinion, how's that next wave gonna be like? And a good statistic is, relative to what you had mentioned in the previous bear market, right? Where it was, real quiet, not much activity going on across the social Reddits. And when you look now, the activity is essentially 10x more, right? So how do we keep that trend going? And that obviously pertains to, onboarding more users. And it's all right, man. Like, I don't really feel offended or anything when someone, calls me an ishcoiner or anything like that. I really, I'm pretty stoic when it comes to these markets. It's all one um giant living organism. Some
Sto-
things are good, some things are bad.
Stoicism is close to godliness. But and I don't mean that in the religious term. I'm not like super religious or anything like that. But as far as onboarding, again, I'm going to give you a really boring answer, but you have to do all of it. Like you have to do education, you have to do you have to do like the kind of orange pilling aspect of things. You have to, but at the same time, it's like you don't go like full car salesman or like well like the meme for like the 2020 Bitcoin community was like going full re. Like you don't just like you don't try to like force people into conversations about Bitcoin or crypto. Like you just don't. Like you can't do that because that's not how you onboard anybody. Like you can, sure. You maybe you get like 10% of people that way, but that's not a winning strategy. And as far as like having conversations with people, like this goes to the stoicism part is like you just have to make it clear that like you're a wealth of knowledge, whatever that means to you, whether you're sharing stuff on your socials all the time or you just bring in like a nice, precisely planned and executed just conversation point around markets and just prove you know what you're talking about. And people will get to the point of like being like, okay, like they know what they're talking about, and then then it just gives you more weight to the things that you say. So like when you do say things about crypto, they're going to consider it more or Bitcoin. I'm going to say Bitcoin because I prefer Bitcoin, but you guys can do crypto all you want. Um, and I definitely agree. It's going to get to the point where educational institutions are going to be training the next developers. We're just still at that point right now as far as the adoption goes that the independently driven developers and hobbyists and contractors are the ones that are making all the money because there's nobody out here doing it. Eventually, that's going to spread throughout the market, and people are going to catch wind. And then there's going to be people flooding into the computer science industry, just like there's people flooding into the fitness industry for the last couple of years. Um, but yeah, that's a really really boring answer, and it's probably not as exciting as you wanted, but you got to do all of it because like we were getting in arguments during 2020 2021 about like on Bitcoin Clubhouse and then on Twitter Spaces when that started up, people were trying to shout and yell at each other. It's like, oh, why are you talking to politicians? You should be talking to the average person. Like you don't do one or the other. You do both. Like that doesn't make sense to just pick one type of person or one angle to try to approach something from. You got to do it all. And that gets to the point of where each individual is better at having one conversation than the other. Most people don't want to accept that either. It's like Dennis Porter is great for talking to politicians and lobbyists. Is he great for talking to retail? No, because a lot of us don't trust him. But there's like again, to the point that I made with you guys in crypto, is like everybody has their flavor. You just got to let people do what they do.
True decentralization, right?
Yep.
You know, back in the Mount Gox days, even though what happened to that exchange, and then eventually with that hack at Bitfinex, the motto for true crypto enthusiasts was that the state should never be involved with your money, right?
Exactly. And
And
that's
then
why
and then you
I don't mean to talk over you, buddy, but that was why I worked with two of my other friends on writing up an art like a document and then an article for Bitcoin Magazine, where we got together and we wrote our like what we think a declaration of monetary independence should look like. Because the state should not be involved in money. They have proven over
yeah
the last thousands of years that any state is not properly equipped to control the monetary supply.
yeah I agree with that 100%. And me and you really align on that aspect. Everyone should be free to do what they do. And it's so odd when mass consensus, outside of the very few, such as yourself, Mike, and the majority is sort of like, oh, we need to have the SEC say that XRP is a security, that Ethereum is a security. We need to regulate everything, right? Send everyone's bags to zero. And in my opinion, if you have open source protocols, right, you should just let people dictate where the market goes, right? Let them have the freedom of choice, right?
Yeah,
And
and like
you know,
and there's a point to that too where I've been working on quite a few essays, and I keep talking about them, which I feel bad because I talk about them and I think a few of my friends and followers get excited about it, and then I like work on something else and it drags out the publishing time. But I've been working on an essay talking about complex adaptive systems, and an economy is a complex adaptive system. Like, and what people need to understand is that a body and an economy are both complex adaptive systems in the sense of they're a broader network that is taking in many different inputs at once, that is seeking homogeneity. And when you have a system like that, the only way that that system improves is through free market dynamics and natural selection. Because now, like, you guys know how DNA works, right? That's just random mutations that produce a new improvement or something that's to the detriment of that organism. If it's detrimental, it kills it off and it moves on to the next thing. So in a system like that, with where you're combining free markets and natural selection, the things that work are integrated and allowed to like continue going on, and it provides more value to the system. And the only way you can do that is through random chance and then a free market dynamic to where you put it through the gauntlet. And if it survives and it thrives, great, cool. It's going to upgrade the system, which is just like you can look at that as a crypto project or individuals like you and I working jobs or whatever. And people don't understand that like regulations and laws really don't do shit. Like they really don't. Like you can outlaw guns all you want. Bad people are going to find a way to get around it. That's because the bad people are working in the law of reality versus the law of human society. They're just patently different. And once you understand that, you would understand that like, okay, like maybe we don't maybe like XRP, like that whole thing isn't taken down by the SEC or whatever, if they even could be to begin with, because they're clearly having troubles with their court case. Um, if they don't, then it's the onus is on like the rest of us to make sure that those of us that interact with newbies that are like talking about having positions or exposure to these projects, you just have the conversation with them like, hey, like, you might not know how this shit works, but I do, and you're not going to like the outcome probably. And then you just let them make the decisions for themselves, because then the natural selection will kick in, If they lose all the money that they put into it, sorry, but you put your hand close to the flame, you got burned. Like, what do you expect? Like, there isn't always going to be a parent that stops you from putting your hand in the fire. You got to learn it yourself a lot of the times.
Yeah, there are definitely a lot of cases where like a lot of these projects are put through the gauntlet, especially more recently, Solana. When you have a majority holder being like SBF and his entities, Alameda and FTX. Um, Payne, correct me if I'm wrong, but they're in control of at least 10% of the current circulating supply. Am I right on that?
Of
I
FTT?
know it's no Solana, the
Oh
Solana
yeah,
tokens.
if not more.
Yeah, yeah. So I think I saw two numbers. I saw 10% and then 20%,
I've seen the
and
20% one.
Yeah, I thought it was
yeah,
20,
yeah,
which is
and
like
I'm not sure if that includes the current supply that they own, or like the things that they have currently investing, and I'm not sure how that's going to play out given the current environment for them moving forward.
you could argue that's bullish
So
because it takes 10 years usually to liquidate companies' balance sheets after bankruptcy.
yeah,
Unless Solana's
yeah,
the first thing they pick.
yeah, and talking about like letting the market do its thing. Um, myself, I like the price. Price is everything. You can have the greatest tech in the entire world, but if you don't have any marketing, if you have zero community behind you, I'm sorry to say it, but your project might as well be at zero. I'm sorry to say it, right? So, with that being said, there's a case to be said, with something like Soul. Okay, just before I go on this little statement here, this is not an endorsement for Solana. Any tokens that are mentioned here is not financial advice. Please consult your financial advisor and anything of that sort before you make any move within the digital asset space. This is purely speculation talk. I want to make that very loud and clear to all the members in the audience. Um, so, Mike, from a price action perspective, it had everything going for it. And, even myself, back around Christmas, I'm like, dang, this thing could go to $3 or $4. But, going towards, the 30th and 31st, I thought, man, now that all these headwinds are gone, potentially it can be a good play for a quote unquote echo bubble, right? And, it went through the gauntlet and it's up like 200+% since that. And talking about the echo bubble, um, would be crazy if this was the top of the rally, guys. It really would. But Mike, Mike, uh, let's entertain something. Let's entertain something for clout purposes, man. Not clout purposes, but more of a fun experiment. Probably not going to
Let's do
happen
it.
the way people expect it to be, but a little thought exercise. What are your thoughts on a 2023 echo bubble for crypto?
Do me a favor and define what you think of as an echo bubble.
Echo bubble would be um, probably running it back to pre
BTC
US.
30K?
No. It would be
No.
like running it back to pre USD peg, so like 40K, something along those lines, and then a retrace to 19K, 19.7.
You know, I wouldn't put it out of the realm of possibility. Because I'll tell you guys, when Bitcoin did the run from the bottom of 3 to 4K up to 13, I was just completely numb at that point. I was like, all right, cool. Like, this fucking just doesn't mean anything. And then when it ran to like 30, 40, 50, I was like, oh, what the hell is happening? I don't know if you guys are like not swearing. I apologize for it for YouTube. Um, But I was just like, I officially don't believe what I'm seeing and I don't understand what's going on. So Bitcoin likes to do that. Wouldn't surprise me if we ran up over 30 or 40. It wouldn't phase me one bit. Um, Now to phase me would have to get up into like the 50s. If it was the high 45s, high 50s, I would honestly probably be panicking. Um, because in order for it to do that, like right now, there would probably have to be some like really big shit happening underneath the surface that we probably wouldn't be aware of, whether it was legal or not. And I'm more of the position I would be very, very bullish if we just made a very slow bowling in price action, like up on the weekly time frame right now. Um, a quick rise, especially in this environment, is not a bullish signal.
Yeah, so you want something more of a spot driven market, which is what we formed in 2016, 2017.
Yeah,
And when you compare that to 2020, 2021, a lot of that was derivatives driven, right? And
yep,
after that whole debacle, you had bear market rallies where derivatives led, and then spot was selling. So more recently, um, earlier this year, spot was actually leading off of the Asian exchanges, and that's relative to the same environment that occurred off of our December 2018 bottom. But I'm in that camp that the next cycle is going to be very reminiscent of the 2016 2017 market cycle, more spot driven more than anything, especially when a lot of these fintech companies, right, like Celsius and Voyager and FTX, which is what I consider them. I consider them failed fintech companies, fake startups, companies that could have been listed on the Nasdaq if we're being honest. Um, and yeah, that's where I stand, and that's what exchanges should be considered. They should be considered early stage startups, and they all have valuations of something that could be listed on the Nasdaq, right? And just because something is listed on the Nasdaq doesn't necessarily mean that it's going to go up 100x, 1000x, whatever it is that you're looking for, right? So I see that we're approaching the hour mark. Gentlemen, if you're here on the listeners panel, feel free to follow us here on Twitter at Because Bitcoin if you enjoy Twitter spaces like these, where we present to you our crypto specific content here at Because Bitcoin. And just as a reminder, if you just came into the space or you've been in and out of the space, we will be uploading this recording of the Twitter space on our YouTube, which is Because Bitcoin. Same thing pertains to all of our Twitter spaces here. They all get re-uploaded onto YouTube. So if you're here on the listener audience and you want to come up, I encourage you to press that request button and I'll bring you right up. That will be absolutely no problem. Feel free to give your statements, ask some questions. I'd love to have you up here and welcome you to the Because Bitcoin community.
especially if there's like pushback on anything that we've said, because like I've stated, I largely don't actually know what the fuck I'm talking about. So if people do have opposing positions and they think that it like stands ground, I definitely want to hear it, because I'm constantly in doubt that I understand what it is that I'm saying or what it is that I think, and I like to hear the opposite side, because if it makes more sense, I'm gonna start to change my opinion.
All right, we have someone called Dr. Detroit. Dr. Detroit, I want to remind you of one thing before you say anything, sir. I want to remind everyone here that there are some rules that have to be followed. I like to keep a tight ship around here. No cursing, no speaking over one another. Please wait your turn if you want to engage in the conversation. So, Dr. Detroit, I want to welcome you here on our Twitter Spaces. Thank you for coming up. How are you? What's going on?
Good. How you doing? Thanks for letting me up. Um, yeah, I just wanted to say I think what Mike just said is I'm worried about the same thing. Like you were saying, oh, I might be panicking. It's not like I'm panicking, but you know, look at all the other money that's came in all of a sudden. You know what I mean? I mean, this has been a crazy amount of money just pumped in to all the systems. You know what I mean? I know we're seeing it, but how are all these other coins like doing it? You know, I'm just like, how is all this money? Where did this come from? All of a sudden is what I'm like scratching my head about. That's all I really wanted to say. I just don't know how much volume has actually been put in to the whole system, but a lot, you know.
Well, and to that point, especially in like the crypto side of things, um, a lot of people thought it was a myth for a very long time, starting from like when I got into the space in 17. A lot of people thought it was a myth when we talked about how there was individual groups and what like you could call them cartels of like people with high amounts of Bitcoin that would go through crypto markets and take advantage of weak order books and just like stuff like that, to the point of like being able to pump some of these crypto projects that are trading on, like, for example, Binance or formerly FTX, and making it seem like there was a lot of volume going in when in reality it really wasn't much. It was more of just like a precise push at the proper moment to push momentum in a particular way. Um, Unfortunately, a lot of that has actually come out. Like a lot of like the screenshots and stuff were being leaked during, I think it was 2021 and earlier parts of this year. So hopefully that lesson has been kind of disseminated across, so people understand that that is like a massive risk factor to like just like the crypto space in general. But then when Detroit, when it comes to like, I don't like, were you also referring to just like broader like legacy markets too?
Yeah, that's. I mean,
Yeah, because
yes.
like, and Joe's in the audience, and he and I had talked a little bit on. I think it was over the weekend. I was driving. Um, where from what it looks like to me is that a lot of the legacy participants, that's like S&P and NASDAQ, Dow, and all that. It seems like a decent portion of the market is betting on a Powell pause, and they're again trying to front run that decision. And it seems like there's a fair share of confidence, considering how, to your point, Detroit, like, it's just broad sweeping almost. It was broad sweeping almost across everything. Like everything pumped like late last week, right? And that like that is cause for concern in my opinion, because again, to the lessons that I learned from like with the Bitcoin bubble of 1819, and then just like the last like 18 months of price action broader, it's like when the market is confident in something, it's usually wrong. And if the market is this confident in a Powell pause, or even a Powell pause being good, um, I'm hesitant. Like, particularly this pump in Bitcoin, like 30% in what, 3 days? Like, I don't trust that at all. Like, that sounds like a bear market like rally, where it's in bear markets, prices goes down slowly and consistently, and then it corrects quickly, right? Because that's the exact opposite of a bull market. In bull market, it goes up slowly and consistently, typically, except for in Bitcoin, it can get pretty parabolic. But when it's building up that momentum, it's slow and consistent, and then the sell offs or the corrections are pretty rapid, but they're fleeting. So this feels like a rapid correction that is fleeting to me.
Yeah, with a lot of these alts, man, the individuals that held out of the supply, they largely dumped them over the summertime, and so the books were so thin that it really didn't cause much for these large pumps to occur. And on top of that, there are actually positive net inflows into DeFi for the first time in well over a year. And if you're knowledgeable within that space, essentially people are taking their sideline stablecoins and then purchasing collateralized assets and putting them into these platforms like Aave or Compound, many things like
So
that are built.
they're doing all the stuff that caused the blow up to begin with again.
Well, not necessarily, not
Well,
necessarily.
general lending isn't necessarily the worst thing in the world. I think
Yeah,
it's
With
when like
I'm not
and
saying
with
big
anything
firms
against
get.
general lending and like collateralized stuff like that, but weren't those projects the reason that DeFi summer like blew up by fall anyway?
No, not necessarily. What occurred in DeFi summer was people wanted to experiment by building smart contracts on Ethereum and things like yield and all that stuff. But predominantly with platforms like Aave and MakerDAO and things like that, it's not like you can list any asset on there. There is a strict framework to get your asset listed on there. And with something like Aave, the developers always make sure that, this isn't just some token that can get listed there. There is a strict process. And if you go on there, and you see what assets can be tied up to your account to borrow against them, they're usually all high caps, right? And they had absolutely nothing to do with things like Celsius, like FTX, right? Those companies, right? That's not crypto. Those are fintech companies that use customer assets. And I see some
I
people are
don't
like
know,
laughing
Wabi.
and all that stuff. I
I
mean,
don't
but how
know.
how does a decentralized protocol have to do with a company falling down that clearly borrowed their user assets?
It's
Like,
just
what
it's
does
just
it's essentially because it's essentially saying that, oh, the Ethereum project is the reason why FTX blew up, right? And again, I know I'm having
that's
like
actually
some
that's fair.
people
That's
like,
fair. I'll give you that.
yeah, 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 yeah,
But
yeah.
I
So
will
I'm
say
not. So I'm not sure why people are laughing, to be honest.
using the
Um,
problem
because
is
it really speaks.
the problem is though,
Go ahead. Go
like
ahead.
the reason that I'm pushing back a little bit is that like using a collateralized asset from a company that's producing a token that is in an industry that is so nascent that the only
Mike. My
project that
bad. My bad.
actually
Mike.
operates well is Bitcoin. It's just like I don't know if you want to do that.
Mike, Mike. I didn't mean to say collateralized asset. I'm talking people like using their Ethereum, using their stable coins to purchase assets like Ethereum to then use them as collateral. That's where I was getting at. I didn't mean to say collateralized assets like UST and things of that nature.
Okay.
I wanted to make that. Yeah. So I'm sorry if I got my words mixed up there. I had to message the producer here because it said that the host was having connection
Yeah, I
issues.
saw
So I'm
that.
sorry about that. I'm sorry. I'm sorry about
Nah, you're
the
good, man. It just makes for decent
yeah,
content,
yeah, yeah, yeah,
especially when
yeah.
people think that we're
So
arguing and fighting on stage.
yeah. Because I know with like that side of DeFi, it's like Alice in Wonderland, and it's something else, really. But yeah, I see we've reached the hour here. If anyone else wants to come up and uh, and talk shop, give any statements,
If
ask a
you guys
question,
don't
feel free
mind,
to do so.
7 minutes is my cutoff point because I was actually our
Yeah. We're
boy
wrapping up. We're
Maguchi
wrapping up.
was hosting a space tonight, and I was gonna try and be there for it.
Yeah, no problem, man. Yeah, we'll wrap up here. So with that being said, guys, have the link to our Discord up above on the nest. I want to thank you. I'm just going to call you Dr. Doom. I want to thank you, Dr. Doom, for taking the time out of your day to come up here on Crypto World Radio to talk some shop. Thank you so much,
Hey,
and God
hey,
bless you.
Wabi, I'll help you out here. Like the pronunciation of my last name is don't overthink it. It's exactly how it's spelled. So it's just Hobart.
Hobart. Okay,
Yep.
Hobart.
yeah.
Okay.
And no, you
And
like you are far from the first person or the last person that will like be very careful and not want to mispronounce it.
no problem, man. Okay, I'll remember that. So I want to thank you again, brother, for coming on up here and spending some time with us here on our evening spaces. And to our listeners, thank you all so much. Just a reminder, I'll say it again for the millionth time. The replay of the space will be uploaded onto our YouTube channel. And also, all of our content moving forward for the time being will be here on Twitter Spaces and then re-uploaded onto our YouTube channel. Our daily stream of content is Monday through Friday at 11 a.m. Eastern Time. We have Market Check, which is consisted of general macro US equities and also some crypto stuff here and there with our CEO Max and our analyst Premise and Snorlax. And then we have Market Talk at 4 p.m. Eastern Time with Carter, and he talks pure equities, things of that nature. And tomorrow's guest for Market Talk is, I think it's RJR Capital. And then myself at 7 p.m. Eastern Time with Crypto World Radio. And for tomorrow's special guest is an individual that is a researcher over at Masari Crypto. Really excited for that one, guys. And just a reminder that sometimes with these spaces that I do, I try to do them at 7 p.m. Eastern Time, but in some rare cases, like we had yesterday with Dr. Jeff, it might be a little bit earlier in the day or a little bit later. So when you do follow us here on Twitter at Because Bitcoin, I encourage you to turn on bell notifications so that you can be made aware of when these spaces go live. So with that being said, thank you all so much. I'll see you tomorrow. Take care, and God bless you.
Take care, Wabi. And thank you,
See
Mike.
you guys.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, you say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.